Just screen off. Finish writing the questions.
Last one. Finished.
Finished.
Yeah.
No need to share it again. Finish, no?
No, I finished.
Okay, the next one, dual function of the cash book. This is also we have already learned. Okay, debits and credits. These are the dual function of the cash book. Okay, one entry should be written on the debit side, and the other entry should be entered in the credit side, right? So all the cash received should be entered on the debit side. All the cash payments should be entered on the credit side of the cash book, right? So cash book functions as a prime entry book as business records the receipts and payments of cash at first in the cash book in a sequential order using the receipts and payment vouchers as source documents. Okay, so we learned about the source documents and such as receipts and payment vouchers, right? Regarding the cash receipts and cash payment vouchers, right? So using these source documents, we are going to enter the transactions in the cash book. That is the prime entry. All the receipts and payments of cash are recorded neatly in an order in the cash book, right? So cash book also functions as a ledger account as it has both the debit and credit sides. Therefore, cash book performs two functions. So cash book is acting as a prime entry book as well as a ledger account. Since cash book, when you are doing the cash book, you know you will be mentioning the debit side and the credit side. Okay. In the cash book, you are mentioning the debit side and the credit side. So cash book is acting as a prime entry book as well as a ledger account, right? Since it is having debit and credit side, we call it as a ledger account, and it is also a prime entry book. Prime entry book means what? What do you understand by prime entry book? We learned, no? Whatever the books which we need, which we enter first before going into the main books. Okay, before entering into the main books, we enter all the records in the prime entry books, isn't it? Yes, see, prime entry books are the books in which the transactions of a business are recorded at first, according to the order in which each transaction had occurred by using a generally accepted method before recording them in the ledger account. So before moving to the ledger accounts, you prepare the prime entry books. Okay, so prime entry books means those are the books which help you, which the transactions are recorded first. For the first time, all the transactions are recorded in order in the prime entry books. Then only you can go to the main ledger accounts. Otherwise, you will have to mess up everything, right? If you are going to straight away going to the main ledger accounts, you will be messing up everything, right? Once you record in prime entry books, and after that when you look at the prime entry book and enter into the main ledger book, that will be so nice, and you can minimize all the errors and all. So we have learned about prime entry books here, necessity of prime entry books and all. If you have forgotten, please go through that. Okay, so here uh, cash book is acting as a prime entry book as well as a ledger account. So these are the dual functions, two functions performed by the cash book. Okay, performs a function as a prime entry book, performs a function as a ledger account. The next one, recording of cash transactions. This one you know already, we have practiced how to record and all, right? Cash transactions. How do you record it? All the cash receipts are debited. All the payments are credited. That is the rule, right? So cash is an asset of the business, you know. Whatever the cash we have, cash in hand is a asset of a business. Okay, the receipt of cash increases assets. Yes, when you receive cash, it will increase your asset. But when you pay, when you do a payment, your cash will be decreased. Okay, cash outflow will decrease your asset. Cash inflow will increase your asset. Therefore, double entry principle for asset accounts should be applied for recording cash transactions in the cash book. So double entry principle. One entry, one transaction, you will be recording in two places, no? Debit and credit side of the two places. So that is double entry, right? So cash received, cash book debit. When you receive cash, you should debit the amount. The rule is what? The increase of asset is mentioned as debit. Okay. Why are you debiting there? Why are you debiting there? Because your asset has increased, right? That's what you're debiting. Okay. Payment of cash. Cash book credit. Why? It is causing the decrease of asset. Okay, so when you do a payment, it will decrease your asset, so that you're recording it in the on the credit side, right? Accordingly, all the cash received should be debited and all the cash payments should be credited in the cash book, right? So since the cash book functions as a ledger account, when the business receives cash, the debit entry of the double entry for that transaction entered in the cash book. Only the credit entry for the relevant account has to be posted in the ledger. Similarly, the payment of cash is credited in the cash book and the credit entry of the double entry entered in the cash book. Only the debit entry of the relevant account has to be posted in the ledger. This one we have already done. This is the concept we have followed when you're entering the cash book. When I say cash received from debtor, cash received from debtor. How did you enter that transaction before? How did you enter the transaction? Cash received from debtor, cash account debit, debtor's account credit, isn't it? Cash account debit, debtor's account credit, right? Paid bank loan interest, paid bank loan interest. So that will be cash account credit, bank loan interest account debit, cash account credit, bank loan interest account debit. Okay, so that is mentioned in this paragraph, right? Whatever the double entry, that is the double entry.
वाईफाई ऑफ आ गई.
Okay. Right. So, when you receive the cash, you will be debiting that in the cash book and the credit amount will be transferred to the relevant account. When you do a payment, you will be crediting in the cash book and the debit amount, debit side will be go to the relevant account, right? So when you pay your electricity bill, okay, electricity bill paid, that means cash account credit, electricity bill account debit. Okay, sales has been done, right? Sales, cash account debit, sales account credit. This is how you entered already, right? So this is the way of recording cash transactions in the cash book. Accordingly, the values that are debited in the cash book should be credited into the relevant accounts in the ledger. So credit, whatever the values credited in the cash book should be debited to the relevant accounts in the debit ledger. Understood? Already you have done this one, isn't it? Whatever said is like this. Capital account 80,000 debited in the cash book means capital account, it should be credited in the capital account, right? So bank loan debited 50,000 in the cash book. So in the ledger bank loan account, credit 50,000. This one we have already learned, right? We are just looking for the theory only here. Balancing off also you know, right? So no need to look at that. Right. Shall we quickly write a small note on this?
Okay.
Write on the heading, dual function of the cash book.
Okay.
That's all, only two questions.
Finished.
Um, right.